again. This one, I thought instead of actually doing an overlay of a structure, I would just speak about some very common offshore strategies we have seen in the past 10 years to the extent of they're so common, I see every single day. So, let's start over with advertising and marketing based services. We touched on Facebook setup the other day. So there's many ways which we can use an offshore entity to facilitate tax effective international commerce. So service-based companies over in the advertising and marketing sector, as well as the sale and distribution of information-based products, is very common with this. We've seen the video you can go ahead and check out with the offshore setup of Facebook and how you can look at doing this. Now, basically, the key to the successful use of offshore companies for such activities centers on the service being seen to be provided from the offshore, plus the service must be billed commercially realistic rate, okay? So this requires a particular attention to be paid to the wording of sales and other commercial agreements. Additionally, it's vitally important to ensure that the offshore company is not seen to be operating from an onshore jurisdiction. For example, it would not be advisable for the offshore company, in this instance, to have a permanent physical office, let's say in London. You would have to be operating out of, let's say, the Cayman Islands or Hong Kong or somewhere like that, those offshore centers. Something else which we see very commonly is the mail order or website-based businesses. This is another great example of a trading operation that can work tax efficiently offshore. Commonly, mail order and many website-based firms never actually take physical supply of which they sell. Hence, there is no need to keep the stock warehoused. So most mail order businesses, in fact, are middlemen whose specialty is basically marketing. How it works is a business receives an order either via a website hosted or in a response to a print ad which they have placed from the offshore entity. They pass on the particulars of the order to the manufacturer who fulfills the order and packages the product using the mail order or website-based business's branding from mail or the courier direct to the end user buyer. Provided the order is seen to be taken from the offshore entity, the difference between the cost and sale price can potentially be based offshore, which is then obviously tax-free. So this is a very popular strategy we have seen, especially in recent years. But again, for this actual mail order or website-based business needs to be seen as managed and controlled offshore and to be taking orders from offshore, which requires a considerable skill and experience on behalf of the international business supplier / manager, okay? So very key that the operations are still held offshore, but much easier to do so than the advertising and marketing based services. Something you might not have heard of before is the offshore captive insurance companies. So if you would like your business to claim a maximum tax deduction possible for payment of insurance premiums, or if you would like to be able to access insurance premiums at wholesale rates, you might want to consider setting up your own captive insurance company, which would be based offshore. You know the offshore jurisdictions. I've mentioned a lot in previous videos. This is how you would do that. So if the actual captive insurance company would, in the ordinary course of business, insure via the captive your various risks at the highest conceivable premium, i.e. within the bounds of the commercial reality. Therefore, the captive would reinsure those risks elsewhere, if that makes sense, at a lower rate. The profit made by the captive on the differential would be realized, and the receipts offshore would be then tax-free. Another advantage of owning the offshore captive insurance company is that you would have a vehicle to invest in a wider range of financial products that you could otherwise access if you were set up the captive offshore entity onshore, where you would be limited to those onshore investments, so you can then reinvest those strategies in a very tax-free sense. Moreover, captive So the actual captive must be incorporated in a nil tax jurisdiction. The returns of investments would be the same, and then could be reinvested and continue to be reinvested on a multiplier, obviously compounding those funds tax-free. So what I didn't actually put in there is a debt factoring business as well. This is essentially whereby a company flushes the actual debt from a cash-strapped business for less than face value, let's say 80% of what is owed, which the debt is then collected in full by pocketing the difference, for example, in this 20%, and its operating profit. So this is a good method as well, a little bit more complicated. Eventually, the actual debt-based company would then collect 100% of the debt, but the difference is where you can actually benefit on, and then you can suck out all of the operating capital and e.g. minimize those tax, just mitigate those taxes, as you would show on the onshore environment. So investment in offshore or hedge funds, or offshore hedge funds even. This one, I think I've uploaded a video so far on the BVI hedge fund setup, or the BVI hedge fund setup with the feeder funds, or with the the holding company and the Cook Islands Trust. Okay, so we have touched base on these on the channel previously. You will probably see future videos in all of these segments, as they are the most common types of offshore structures that people are using, corporations are using today. So many, if not most, onshore funds are limited in terms of where they can invest and what they can offer to a retail investor. Plus, high regulation makes setup and maintenance cost such a significant issue with having a hedge fund onshore. Offshore funds are quicker, cheaper, and just way more efficient to actually maintain, because they don't have that huge red tape that's wrapped around them. So the fund manager can be very flexible. Obviously, this can bring some scrutiny, this can bring greatness, so it's a 50-50, the risk is there. This is attractive to investors with a higher risk appetite, because they can see those double-digit returns. A lot of offshore funds, however, do not allow onshore investors to participate. Sophisticated investors are also exempt from this, obviously, because they have the money to lose. E.g., a person with a net asset pool of more than 2 million or an annual taxable income that is no less than $200,000 would be a sophisticated investor, I would say. By setting up an offshore company that can gain you access to alternative investments and having less red tape can be very beneficial. We have them in touch base how you can do this. I'm not sure if the video has been uploaded yet. It probably will be by the time this video is out. So some other businesses is insolvency or divorce insurance. Again, this is quite a complex one. Don't really want to go into it. It's very boring. If you did want to obviously learn about these, you can just drop me an email, will.hodgson@forwardpointsolutions.com, or you can go onto our website and just drop us a bit of a message, an inquiry, and we can get a meeting booked for you regarding any of these topics. I'm just briefly going over them because a lot of people are like, okay, you just set up an offshore company. No, it has to have a fucking reason, okay? Sorry for swearing. But it has to have an actual purpose of being a company. It's not just a shell company that would be, touching on a basis of not being compliant. So we have to stay compliant in the international business sense. It's very important nowadays as well. So group finance companies, we've seen them, how they're structured around the world. So essentially they're the offshore finance company, those funds that actually come into it by the onshore resident company. In certain situations, it is even possible to claim a tax deduction from the initial payment of funds overseas, as well for the interest payments made to the offshore finance company. So you can basically finance yourself from an offshore entity. Again, very complex situation, but it's a very common strategy as we especially move forward with increasing taxes, increasing everything really. This is what kind of happens. The more red tape that's put on the onshore environment, the greater the incentive to actually look at common offshore strategies to basically make money, because it's nearly impossible to make money in an onshore environment due to the taxes. IT consulting kind of says itself. Same as this one here, cheeky recruitment agency. Over in a low tax environment is a very clever way to do stuff. So how it can work is the contractor potentially could agree to exclusively work for the agency in return for the agency guaranteeing him by a written contract a minimum volume or rate of work. Why would you agree to work exclusively for one agent? You need to answer this question. The next time a contractor finds a job, he would like to simply tell the actual prospective employer that he works exclusively for the XYZ company, limited maybe, in the Cayman Islands. And the contract is for $100,000. The employer signs the contract to pay the employment agency, and then the subcontractor obviously then subcontracts the job to the contractor for $50,000, where the lowest rate could actually be done for that type of work type. So you're obviously paying a lot less tax on the personal one, but you're working exclusively. The operations are based over in the offshore entity, and you can get half of the income fully tax-free. So this is a very clever way to actually pay yourself. Is this one here? It's a very popular strategy nowadays. IT consulting, classic, you know, it kind of just says it in the name. You know what IT consulting is, XYZ. Intellectual property holdings, again, very common, especially with like medium to large size businesses. You will find out that the website, slogans, rights, images, lots of variations of the actual business components are owned as intellectual property in maybe, for example, in Luxembourg, or somewhere like Hong Kong or somewhere like Gibraltar. This is very common to do so. I mean, in Gibraltar, for example, as long as there's not even a bank account in Gibraltar, bank account is elsewhere, there's no operations within Gibraltar, you can apply for the exemption. If not, it just will be 10% tax. So offshore employee welfare funds, something else, and these down here too, you know. But the most common one, I would say, is advertising and marketing, very common. Obviously we see the group finance companies, but these get very complex, especially with estate planning and trusts, XYZ. These two are the most common, I would say, moving forward, again with IT consulting as well. Now this one's a fantastic one if you are like working freelance and stuff. This can potentially be something. Obviously you'd have to book a meeting, learn a lot more about how it actually works. I'm just doing a slight overview to show you the common offshore strategies. You can search about yourself if you have the time. You can do some DIY research. You can contact some legal professionals to actually make sure you are compliant and doing the right thing, XYZ, and you're not going to do anything which you're going to regret. So other than that, guys, I'll speak with you soon, and I'll see you in the next video.